Respected brothers and sisters in Islam, a business partnership may begin with friendship, trust, and good intentions. But if the agreement is unclear, accounts are hidden, expenses are not recorded, and profit or loss is not properly calculated, then the same partnership can become a cause of dispute. In Islam, partnership is not only a contract, it is also an amanah, a trust. When two or more people become partners, they trust each other with their money, time, effort, reputation, and future. Each partner becomes responsible before Allah and before the other partners. If one partner hides accounts, shows false expenses, conceals profit, misuses business money, or gives wrong information, this is not only a business mistake. It is a violation of trust. This is why Islamic business requires honesty and transparency. Many people avoid written agreements because they feel it shows mistrust. They say, "We are friends. We are relatives. We trust each other. We will settle everything later." But later, when profit comes or loss occurs, questions begin. Who invested how much? Who worked more? Who is responsible for expenses? Who can take money from the business? How will profit be shared? Who will bear loss? What happens if one partner wants to leave? If these matters are not written clearly, disputes become very likely. A written agreement is not against trust. It protects trust. Every partnership should clearly mention the names of the partners, the nature of the business, the amount of capital contributed by each partner, the duties of each partner, the authority of each partner, the profit-sharing ratio, the principle of loss, the accounting system, business expenses, personal withdrawals, and the method of ending the partnership. These are basic matters, but ignoring them can cause serious disputes. Profit should be shared by percentage. For example, 50% and 50%, 60% and 40%, or any other agreed ratio. But profit should not be fixed as a guaranteed monthly amount. The reason is simple. In partnership, profit must come from actual business profit. If there is no profit, there cannot be guaranteed profit for one partner. Loss must also be understood correctly. In a normal partnership, real financial loss is generally borne according to the capital contribution. If one partner invested 70% of the capital and the other invested 30%, then real financial loss will usually follow that ratio. But if the loss was caused by fraud, negligence, misuse of funds, or violation of the agreement, then the responsible partner may be liable. So we must distinguish between normal business loss and loss caused by dishonesty or negligence. A successful partnership needs clear accounts. Partners should know how much capital was invested, what was purchased, what was sold, what expenses were made, how much stock remains, how much money is receivable, how much debt exists, and what the real profit or loss is. Business money should not be mixed with personal money. Receipts, bills, bank records, stock records, and expense records should be maintained properly. This is not merely good management, it is part of Amanah. Some common mistakes in partnership are starting without a written agreement, fixing monthly profit, guaranteeing capital in every situation, putting all loss on one partner, hiding accounts, using business money for personal expenses, and calling a loan a partnership. These mistakes can make a business religiously doubtful and practically dangerous. A correct Islamic partnership has some clear signs. The business is halal. The agreement is clear. The profit is based on percentage. The loss principle is fair and Sharia-compliant. The accounts are transparent. The partners are honest. No one is exploited. No one hides information. This is the Islamic spirit of business. Islam does not stop us from modern business. Rather, it teaches us how to conduct modern business with honesty, justice, responsibility, and halal profit. May Almighty bless our businesses, protect us from doubtful income, and grant us sincerity, honesty, and halal sustenance.